Hi, my name is Tom Brigandy, and I'm the Vice Chair of CFA Society New York's Board of Directors. I'm also the founder of CFA Society New York's Global Policymaker Series initiative. CFA Society New York, in partnership with CFA Institute and the Foreign Policy Association, created this series in order to provide an objective forum for technical discussions concerning the impact of regulatory, multilateral, fiscal, and monetary policies on financial markets and the global economy over both the long and short terms. The format of this session, which is titled African Policy Response to COVID-19, will be 60 minutes of discussion between the moderator and the panelists. Now, it gives me great pleasure to introduce our moderator and my good friend, Hubert Danzo. Hubert is the Chief Executive Officer of the Africa Investor Group. Hubert, the floor is yours.
So on behalf of Africa Investor, it's a pleasure to welcome you to the African Development Finance Policy Roundtable. As Tom has mentioned, my name is Hubert Danso. I am the Chairman of Africa Investor, the African Union's Continental Business Network, and the CFA Asset Owners Advisory Council, and I will be the chair for this roundtable dialogue. This Africa Development Finance Policy Roundtable is designed to provide a window into and more generally assist CFA's global membership, especially institutional investors and the audience in general, understand the dynamics, impacts and opportunities of development finance and investment and economic growth across the continent. And of course, in these times that we're existing, the extent to which COVID-19 has impacted the future prospects of the continent's economic growth. And to take us through this dialogue, I'm joined by Aubrey Hrubry, who is the Senior Fellow at the Africa Center at the Atlantic Center, Chinelo Anohu, who is the Head and the Senior Director of the Africa Investment Forum at the African Development Bank, and Admasu Tadesse, who is the President and CEO of the Trade and Development Bank. So we're going to jump straight into this, and I'm going to call on Aubrey now to give her views on the bigger, broader topic. But I'm going to break it down just a little bit. And as I mentioned, you know, we're living in interesting and challenging times. So, you know, this COVID-19, I'd really like, first of all, Aubrey, and then I'm going to ask the same question of you, Chinelo and Admasu, just to share with us your analysis of the impact of COVID-19 on Africa's economy more broadly, and how that's affected your industry or your organization, and how you've responded specifically. So over to you, Aubrey.
Thank you, Hubert. It's a pleasure to be with you all today. Yeah, I think the biggest challenge that COVID poses to African countries is the economic challenge. We know already that the health challenge has not yet manifest in a way that we had been anticipated. I mean, there were some, even Bill Gates, who anticipated millions of Africans dying from COVID. Thankfully, that doesn't seem to be the case, and that many countries have reduced the health impact. However, the economic impact is quite dire, especially on those countries that are oil producers or dependent on commodities that have been hit by the global economic slowdown due to COVID. So we know the region as a whole is contracting for the first time in 25 years. We've had a long run of growth in African markets, and we're seeing that contraction, which is, you know, has real human cost. And I want to zoom into maybe two countries, Kenya and Nigeria. Nigeria is worse off in that it's oil dependent for government revenues and foreign exchange. And so it has this kind of triple threat, limiting Forex availability, also limiting the ability to grow, and unemployment. So latest figures I've seen, Nigerian government figures, see unemployment at about 33%, which is up to 40 million Nigerians. And that is a real challenge because the growth recovery projections are kind of longer term. So right now, Nigeria is expected to shrink this year between, I don't know, 4.5% to 8%, depending on where oil price remains, and then won't recover to positive growth to maybe the end of 2021 at maybe 0.5% in the best case scenarios. In Kenya, you have a slightly better scenario, which while there will be very slow growth this year, it might be barely positive. Next year, they're anticipating recovery at maybe 5%. But in either case, you have vast unemployment as a result, especially around the informal sectors. So I think the challenge is incumbent on all of us working in the investment space is how can we invest in those innovators that are unlocking growth through dealing with inefficiencies, and how can we really harness all the capacity of African private sector to generate growth during this time. And so for me, as my organization, I have a PR firm and I also have advisory shop. In both cases, what we've been doing is helping to map and understand where African capabilities are in addressing COVID, so that those capabilities can be harnessed by international resources, whether it's the foundations, et cetera. So really can inject new resources into existing and exciting capacities on the ground.
Thank you, Aubrey. That's a very clear and detailed response to that. And I think you've also got a lot of experience and input from the private equity industry's perspective. Could you just give us, your quick, 2-minuter on how the private equity industry have actually responded to this COVID scenario?
Sure. I think that the immediate response by both private equity funds and the DFI community has been one whereby they've mobilized resources for their portfolio companies first. So it's really helping those that are already in your own home to survive this crisis before thinking about helping others. So the funds that I've seen, DPI has been very active, for example, putting forth COVID continuity plans and support plans for their portfolio companies, injecting and putting new resources out there, both intellectual and additional capital. I know that many funds have been mobilizing working capital on behalf of their portfolio companies, and the DFIs as well, to support their portfolio funds and companies, those that invest directly. So at first kind of wave of response has been to support portfolio companies. I think some are looking aggressively at making new investments during this time, because many would argue that DFIs play a very important role during crises, which is, being the investor of kind of last resort or first resort, however you see it. But many of them struggle to figure out a new way of doing due diligence during a time when we're all homebound and unable to travel. So I think those are some of the challenges, is how do you kind of build out a new pipeline that weren't already in your pipeline, and you didn't do due diligence in this new era. So, I see this portfolio support role that is very active, and then secondly, doing deals that are already in your portfolio. I think some of us, we have to wait to see how DFIs respond in the next coming quarters.
Thank you. Well, I don't think we have to wait too long to hear how DFIs are going to respond, because I'm now going to call on Chinelo from Africa's largest DFI and multilateral development bank, if you like. So Chinelo, the same question to you. Please share with us how you see as an institution, and from your personal perspective, the way that the COVID-19 pandemic has impacted Africa's economy more broadly, and the sort of DFI, multilateral development bank industry more specifically, and then how has your institution and your platform responded to that? Over to you.
Thank you very much, Hubert, and thank you Audrey as well for the intervention. And I think most importantly, the way we're looking at the COVID-19, it came with a lot of trepidation and people not even being carefully attuned to what will be the outcome of this pandemic. But what we have seen is that the impact is not just economic, it's also personal, it's also physical. For instance, the workspaces, we have to rethink working the way we're used to, and that brings a lot of savings because for DFIs and a lot of institutions in the private sector, travel is a huge component of what they have to do in terms of making deals work. I think the biggest impact is that has to be rethought. And we have to see, I mean, this has forced us to have a reset and know that we can't do things differently. And so that in itself is what we have to do. And I think many organizations have risen to that challenge and brings us to the, for what I personally consider one of the biggest impacts of the COVID-19, which is a refocus from a consumer nation, from a consumer continent to that of a manufacturing continent. Africa has to think very, very sure what they need, be able to feed themselves, being able to take care of themselves health-wise, and being able to invest very seriously in the technology that is underlying all of these sectors. So the response from the DFIs has also been to, I mean, for instance, the African Development Bank has floated a $10 billion lending facility specifically for COVID-19. And there's also another $3 billion on social funds. I know the Afro-Exim Bank has also floated a $3 billion facility for pandemic. They have carefully walked away from COVID and made it more general. But that is what has been done. For me, the tricky part and what we need to focus on is how this funding and the facility that has been made available actually translates to improving businesses on the continent. And whether you're going through the national government or more importantly, incorporating the private sector, I think a lot of the focus right now has to be in ensuring that there is an increased activity on the manufacturing on the continent and a lot less reliance on importation. I was very happy when Aubrey mentioned Nigeria and being hit because they're hugely oil dependent. Maybe this will be what we're looking for, that hard reset, that you have to be diversified at every point in time and not just be dependent on one component. And I see that happening, especially in the sense of agriculture. People are now looking to see how they can feed themselves by themselves with minimal dependence on importation. I think for me, that is one of the biggest impact of COVID-19. It has brought what we had been espousing theoretically for the past decades on the need to diversify. I think this has pushed it into the fore, realizing that when they shut borders, you have to have a special permit to bring in a component required for manufacturing. You have to run factories that are not in existence because the raw materials are not there. Even where you have the raw materials on the continent, for instance, in Ivory Coast, they have rubber, but they have to export it to be manufactured in Malaysia and Thailand and then brought back for even things as easy as protective equipment like gloves and all whatnot. So not to over stress it, but I think for me the biggest impact of COVID is to ensure that we start thinking seriously about what we can do on.
Thank you, Chinelo. I think you've been very clear. We're talking about how do we move from import substitution or, and reverse import substitution to one of much greater beneficiation and industrialization. I just wonder, where we've been when we say, let's not waste the good crisis, because if we can now have gone to the market, issue a $10 billion bond, $3 billion financings, and a number of other development finance institutions, and Meso will also talk to that. We've now been able to do it. I'm just wondering where we've been over these last couple of decades, but that will pick up a bit later on in our conversation. So Meso, I'm just going to turn to you now with the very same question. which is, as you know, we just really like to get your views and the TDB's views on the impact of COVID-19 on the African economy more generally, your particular industry more specifically, and then just give us a little window into how you at the Trade Development Bank have actually responded to the pandemic from an institutional perspective. Over to you.
Yes, very good to be on the panel with all of you. Greetings. And clearly, TDB has been impacted like many other financial institutions because the economy, no doubt, has been affected in a number of different ways. I think our first point of departure has been to ensure that in this difficult time, as a development finance institution that's specialized in trade, among other things, that we can actually stay afloat, open for business, and capable of keeping transactions going, because we're very transactional as a specialist DFI. So what we've done, of course, is ensured that we still come in regularly and also configure all of our systems so that we can transact remotely. Now, that having been done, of course, we started to ask ourselves, how do we respond? And the first thing that came to mind is, of course, immediate emergency response. So we knew that a number of countries needed to move very quickly to import PPE type material, but also to deal with other related commodities that would be needed to ensure washing and sanitization and all of that. So we basically availed our trade finance lines for rapid importation of these types of medical supplies, but also kept a very close eye on the normal trade finance operations around food security, because with the disruption of supply chains, we discovered that there was quite a gap that had emerged in terms of being able to move product. But as we tried to continue doing the normal trade finance business to import fertilizer, sugar, wheat, and the like, we discovered that it wasn't so easy to move documents, because anybody who does trade finance will tell you it's very document intensive. And so we had to very quickly also start looking at digitization and of course related innovations like blockchain as a methodology of moving documentation across borders in a manner that is much more efficient and fast. So we had always been exploring blockchain as a methodology of more efficiently processing documents, uploading documents, ensuring that all those different steps in the transactional process of trade deals can be done through a distributed ledger that is transparent, easy, that also comes with security around encryption and validation and the like. And so we've started to do live blockchain-based trade finance deals that allows counterparties in multiple countries. In our case, it was first a deal between India and Ethiopia, and then we did another one between Ethiopia and Morocco. And we went live using blockchain, and it was a fascinating discovery that it was actually a very mature technology ready to run. And so we've basically adopted some technological innovations to ensure that we're not held hostage by the fact that DHL takes a week longer to move documents. If you're lucky, sometimes it takes even longer than that. And so that's been one other way in which we've managed to respond. The other thing we've also done is we've looked at local financial institutions in the various economies where we work, and we've tried to see how we can step in and help them with targeted liquidity on specific types of projects. So for instance, in one case, there was a hospital that was going through construction, and there was some liquidity gaps. So we stepped in and applied a forfeiting technique to provide liquidity to the local bank that could then ensure that the contractor and the sponsor could continue with the implementation of a particular hospital. And then, of course, we've realized that to have a robust approach, one needs partnerships. So we've also stepped up our partnership building engagements, and so we've managed to attract a number of big financial institutions who also wanted to do more in our part of Africa, and we provided a mechanism for them to transact through us by sharing risk with us on a number of facilities. And so we've had a very successful run in terms of bringing on board risk-sharing partners in trade finance deals. In fact, we might be making a big announcement to actually share with the industry what we've managed to do. It'll probably be announced next week. But we're talking about $500 million of risk-sharing facilities with a number of banks that have basically said, do as much as you can, and then we'll share the risk with you. Some of it will be on an unfunded basis, others will be on a funded basis. So we've managed to also scale up some of our interventions, knowing that we can actually work with some smart partners who can enable us to deal also with the ratios of prudence that a bank would need to observe in scaling up. You always have to manage your concentrations and the limits that you would normally have to ensure you're following. We've also managed to secure a new partner, which we'll be announcing soon, which will be an innovation in Africa that's not been done before. It will enable us to raise liquidity from the global markets at a fairly attractive price and a fairly attractive tenor to support some of the trade finance operations in a way that's not been done with our particular industry. And so that's something that has also been an unexpected, as you say, we haven't let this crisis go to waste, right? So yeah, so maybe I'll stop here and maybe add some more later on.
Fantastic. Gracious me. That's very impressive, and you've certainly made good use of this situation. Obviously, one doesn't want to have to be in a position to exploit a situation like this, but I think the impact that your institution as a development finance institution and a regional bank can have, obviously that's going to be very well received by particularly the small and medium-sized companies and some of the public sector organizations in the health and the agri-related sectors. But we've also recognized that there are a number of challenges and that the development finance institutions have a very important role to play in going into transactions and sectors and opportunities at points where other institutions can't comfortably go. And I think one of the big roles that came out of the Hamburg principles, which recognize that development finance institutions, multilateral development banks have a lot more capacity to be able to optimize their balance sheets to catalyze development, is a really interesting and underutilized opportunity. Is there really a compelling case for development finance institutions to add value to the participation of institutional investors working in Africa? And any examples you can give would be helpful. Over to you, Aubrey.
Thank you, Hubert. Yeah, I mean, many of us have been working for a very long time to try to unlock more institutional capital for African opportunities and sponsors. And one of the challenges I think we have is that there's often a structural mismatch between the size of the opportunity on the continent and the size of the check that some of the institutional investors want to write, and especially North American institutional investors. So I'm talking about American and Canadian pension funds, for example. New York Common manages $180 billion. You have I think they have basically a 3% allocation to Africa. They haven't used that full allocation. Partly one of the challenges because they cannot be more than 20% of any fund, but you can imagine with that much money to put to work, they want to make a check size investment of something like 100 million minimum. So that means that any fund would have to be over 500 million for them to go in. And there are probably only 12 or so funds in Africa that are over $1 billion under management. So you basically have a structural disconnect. I think many of us were very hopeful for the fund-to-fund industry to kind of bridge that structural disconnect. And some of the DFIs in particular were supporting the fund-of-funds to play that role. So I think DFIs can one, support fund-of-funds to kind of to break up the big chunks of money. Two, there's an education need. Many of the pension funds need to learn the markets. They haven't been active, and this is part of their alternative investment kind of bucket. So there's a need to learn the markets, and DFIs can provide help and support in doing that through their partnerships, through sharing deals. And then, for example, there's a program that USAID has supported, which helps to take pension funds, and I think you've been involved in the past, Hubert, to visit African markets. Particularly, I know they've been involved in South Africa and Kenya. I was on the Kenya trip. And they're slowly exposing U.S. pension funds to the opportunities. And you've seen that because Chicago Teachers Funds were part of those missions, and Chicago Teachers did its first Africa allocation last year. So, I mean, there are other challenges when it comes to African institutional investors. I do think there's also an education around the asset class that needs to be done. Because I know Nigerian asset managers have the ability to put up to 5% to private equity, but they don't put near that, not even 1%. So there's a disconnect in their ability on their mandates, but their willingness and their appetite. And so, yeah, I think many institutions are trying to bridge that gap, but maybe Edmasu or Chinelo could speak better to the African institutional investor challenges.
Thanks, Aubrey. I want to stay with you just on one point. And this is a point we continue to talk about on the continent. We're very quick to introduce numbers like $50 to $100 billion per annum infrastructure deficit and all of these tens and hundreds of billions of dollars that we need to be able to reach a certain level of development. But conversely, you just mentioned, as we know in the market, that there are probably less than 20 funds, less than 15 maybe, that actually are over $1 billion. What needs to, and I understand the fund of funds model, I think a lot of our viewers and audience do too, but what needs to be done before we start having multi-billion-dollar funds? Because we sort of came with this very developmentally, well, let's keep it very moderate. But, elsewhere in the world, multi-billion-dollar funds to address, huge economic opportunities of the nature that are offered on the continent are very commonplace. I'd love to hear your view on what we need to do.
Yeah, I mean, you and I were just talking about the limits on the private equity funds. I mean, those are particularly private equity funds. There's obviously much larger capital pools on the continent already that are in the multi-billion-dollar level. And those are African institutional investors, whether they be pension funds or whether they be, funds like Africa 50. I do think we have, there are more that AFC, for example, on the development finance side. So I think there are more fund pools than just the private equity players. And obviously there are different asset classes. And matching those asset classes to the actual opportunities is the challenge. As we know, that the infrastructure needs are great, but it's not that a private equity fund is well suited for infrastructure investment given the returns and the time horizon. So you need more pools of capital that are better suited and timed to the investment opportunities in infrastructure. And that's what Africa 50 was designed for. And many of the African governments put in money. But some of the pension funds on the continent as well could be well suited to those opportunities, which are kind of longer term yield opportunities. So yeah, I think Edmasu would speak better to that. But, my view is that we need to focus in different asset classes. So we already have a private equity industry. It's still very young, but it is growing, maturing. And now we are, looking at, I think there will be several Africa debt funds that come out in the next couple of years. So we need to see that industry grow. African venture funds, I mean, that industry is about 5 years old, 7 years old latest, outside of South Africa. And it's growing and maturing as well. So you have different asset classes that are maturing, and I think it's incumbent upon us to kind of fill in where the gap is and to leverage development finance where we can.
Okay, thank you, Aubrey. And as you rightfully pointed out, it's about intermediating and finding the right match between the partners. And I don't think in my history and career working in the investment space on the continent, there's ever been a more prolific and impactful way of doing that than through the Africa Investment Forum that is led by the African Development Bank and headed by Chinelo. So we'd love your views on that particular subject of, you know, the role that DFIs like your own are playing to catalyze the relationship and opportunities and match and drive transactions through the Africa Investment Forum, and any other observations that you have that can, you know, better optimize that impact. Over to you, Chinelo.
Thanks very much, Hubert, and thank you also, Aubrey, for that insightful viewpoint, because you hit the nail on the head, what the issues are. And I think what the Africa Investment Forum is all about is to solve those issues one after the other in various ways possible. And it's evident, without repeating everything's been said, that there's a complete disconnect on how to invest on the continent, and it's all to do with dearth of suitable vehicles, as well as an understanding of the market and an interest. And also you find a situation where you look at the roles various people can play and see that various institutions at some point or the other try to play roles that are not suited for. And at that point, it becomes a mission impossible, and that becomes a scorecard for investment in the continent. But were you to tweak the roles a little bit, then you might have a working solution to how to bring funds actually on this investment on the continent. And this is what we're doing at the Africa Investment Forum, to raise capital, to accelerate the closure of deals, and ensure that these things, transformational deals, actually happen on the continent. And in so doing, you have to understand how to tackle the problems and move away from what is the rhetoric out there. There are no bankable deals. Or then create them. If there are no bankable deals, then they can be created. Move away, because it's high risk. I shy a lot away from the de-risking perspective, because what we have also seen in our work, both in the Africa Investment Forum and elsewhere, is that risks tend to be, that you're not aware of, tend to be exaggerated, because you don't know how to handle that particular risk that pops up as a red flag. And I think this is where what we're proposing as a co-investment platform, where different institutions, be it private equity, be it African institutional investors, be it foreign institutional investors, come together. And I propound this theory a lot, sort of like a relay game. You take on the baton when you need to and hand it over when you don't need to. Because, for instance, I used to regulate the pension industry in Nigeria, and it was the same clamor. Oh, there are no bankable deals, where you need to increase the allocation to all private equity. And it became impossible, because what you've just noticed, if we have a 5% allocation already and it's underutilized, I don't see very much the rationale for increasing allocation when that which has been allotted has not been utilized. So you go back to the problem, why hasn't it been utilized? It is the creation of robust vehicles to be able to cater to the peculiarities of the institutional investors, so that they can actually release funds into these investments. And it's a major part of the work we're doing in Africa Investment Forum, and we have brought in quite a lot of people, and it's still work in progress. And it will be something that we will propose, that those who are looking to come on the continent are not quite certain how to, not quite sure that they can get into this on a huge scale. Coming on the platform allows us to hold your hand, to make it easier for you, do the due diligence, and then incorporate what a lot of the DFIs have, which is knowledge of the environment in which they operate. The African Development Bank is an 81-member bank, and out of this, all the 54 African countries are signatories. And there is a wealth of knowledge on the investment climate that is already resident in the African Development Bank. This, all of which are available for the African Investment Forum. So were you to be interested in investing in perhaps healthcare, manufacturing, perhaps technology, it doesn't matter what your particular nuance are. It will be awkward for you to keep getting deals that do not cater to your particular interest. And all you keep saying is no, because we're not interested. However, on the African Investment Forum, we have focused on sort of like a deal matching, a matchmaking service for those who are ready to invest, willing to invest, able to invest, to find out that which they can invest in. And I think if we continue on that path, we've already and then removing all the obstacles that are particular to the continent, the very nuances that stop a deal from going through that may not happen in, for instance, investing in America. In the one step, it would not be the same as investing in Zimbabwe. And while the underlying indices might still be, at the end of the day, what are your ROIs? You have to take into particular cognizance the particular nuance of the country you're investing in. And this is where a local knowledge of it becomes absolutely crucial. And that is why the model we're working on has to also include the institutional investors on the continent, because they understand the market and they will be the skin in the game to understand what to do and how to accelerate this. So I think that sort of approach, a co-investment platform, is what is absolutely essential in moving away from this, oh, nothing is happening, we're not investing, we have funds to go to, and then education, like you have also mentioned, is very key, because what you see is an expectation that it is the same in the continent as it is where I am. It is not and can never be. And no two countries are the same when it comes to investments, and no two investors are also the same in terms of their interest. So these are the things that particularly the African Investment Forum has taken the lead on, and is working assiduously to ensure that these funds that have been recognized in different diverse forms are coalesced together into a strong momentum to actually make these investments happen. Thank you. I think I've spoken too much.
Yeah, fantastic. No, Chinelo, you've spoken eloquently, and you've absolutely made the point. But, you know, unfortunately, in this world of so many different voices with so many different agendas and priorities, not everyone is necessarily going to believe that what you're saying is more than aspiration. So I think one of the important and interesting things is, I'm just going to make 2 points. The first point is the what is known as the 5% agenda, which was led by the African Union and the African Union Development Agency and the Continental Business Network, has already brought together a very large consortium of the leading and the largest African pension funds and African sovereign wealth funds that have said they are looking for that intermediation and that partnership through and with development finance institutions to be able to de-risk and get access to transactions. So what the Africa Investment Forum are talking about is exactly the same as what the 5% agenda as a consortium and coalition of African institutional investors are saying they want and need. And that momentum and that relationship with the African Investment Forum has already started. And the other point I'd like to make is that part of the power of the Africa Investment Forum and the model that Chinelo has just talked about is the fact that we have that local knowledge, and we are able to put skin in the game both at the development finance level as well as at the institutional capital level. And, you know, there's a lot of innovation that comes with that, because in the African Investment Forum dynamic, it's made up of a number of development finance institutions as its bedrock partners. And I'm now going to turn to one of its bedrock partners, the Trade Development Bank in Meso, who's already told us that it's possible and shown us that he's got some great announcements coming out, and he's got some really transformative investments that he's making, some of which I'm sure will also be available and be available on and promoted through the African investment forum. So I'm now going to call on you, Meso, for your views on the intermediation of development finance, as well as to mobilize institutional capital.
Thank you, Hubert. Well, I must say I do share the enthusiasm of Chinelo about the AIF, because clearly we are one of the founding partners alongside the African Development Bank, and it's actually a very interesting network. It's more than a forum, because it actually is a network that allows you to build co-financing syndications, both in the lead up to the forum, just so that you can create some announcements and some excitement around that. But it's more about, you know, enabling DFIs and sponsors, and in some cases, of course, suppliers, in the case of trade finance, to come together and create clubs of willing backers to deals in a number of different ways. Just to give you an example, I can't mention the country, but you know, in the real economy and the industrial sector, there was a case of a particular mining project that we first started discussing almost 2 years ago at the inaugural AIF, and you know, we actually had a boardroom session, and we essentially did a deep dive discussion on the critical dynamics that was blocking that deal from moving. And after that, the sponsors went back and did the reconfiguration that needed to happen to allow the project to get to the point now where we might be able to announce a financial closing at the upcoming AIF in November if it happens. But in any case, it's a very nice setup that's been created that allows you to partner and have very dynamic and robust engagements with a whole range of players. Of course, with COVID-19, we know that it's not so easy to move physically anymore, so it's going to be interesting to see how Chinelo and our colleagues are going to reformat AIF and maybe try to do it virtually. But the magic of AIF has really been the engagement, because, you know, when you're doing business, you want to kind of get to talk to people, to eyeball people, to get a sense of people, right? Because that's not what's on paper typically, and you do need to have that kind of engagement. But maybe just coming to the whole question of how does one help orchestrate more investment in Africa? How does one crowd in more private equity investors into various asset classes? I think DFIs have a particularly important role to play, given the risk perception of the region. So clearly the capital markets are not yet at the levels that they should be, so there's not that many listed opportunities. And so we find that there's a number of institutional investors looking to come in transactions that are not so easy to find, and so that's where DFIs can become very useful. And I think Aubrey made reference to debt funds, and I think the precursor to debt funds actually is co-financing coming into syndications as well. We're about to close a very interesting deal ourselves, where we'll be working with one particular bank that will be taking some slices of a debt opportunity, a debt asset, and they'll be formatting it in such a way that it can be broken up into special purpose notes and distributed to insurance companies in Europe, for instance. And that will be something that's not been done before. I think we all know that you have capital markets, and then you have the banking syndicated loan markets, and of course those who don't go the capital markets route will go the syndications route. And when they do go that route, it tends to be dominated by banks. And once banks get a hold of those assets, they can distribute, but it's not so easy to distribute it to non-bank financial institutions, and that requires a fair amount of formatting and structuring on the legal side, even before you do the deal, so that it's distributable. And so there's a lot that's happening on the distribution and syndication side. We've also found a very interesting way of actually giving comfort to to institutional investors to get closer to us and to actually understand how we are configured as a very private sector orientated DFI. So we've opened up our own capital structure and invited pension funds and insurance companies to buy our own stock. And a very interesting thing we've done recently is made a decision to actually experiment with listing a segment of our stock, because that's always been an interest that institutional investors have sought from us, to find a way to create some liquidity of our own stock, so to speak. So that is an exciting innovation that we'll hopefully be bringing online in 2021. We already began issuing some of our stock about 3-4 years ago to pension funds and insurance companies, and today we are one of the very few DFIs in the African continent that can boast having over 10 institutional investors as shareholders of the bank, and about 6 of these are actually pension funds, and we've consistently paid them dividends, dollar-based dividends, because we're a dollar-denominated bank, and so it's gone really well for them. And with that kind of proximity and understanding that they've had of how we do business, they're now also looking to come into some new SPVs that we're creating to crowd in even more capital. And the first SPV we launched was 2 years ago, which is a trade finance fund. It's essentially a debt fund, but of course the subscriptions are done in the same way you would invest in any fund, but the underlying risk profile and the tenor of the asset itself is self-liquidating, and you can exit within 6 months. So it's a very different kind of fund, and we tend to target money market type players there. So that's a very different type of risk return profile we have. And we launched the fund after initiating the whole initiative, and now it's live. It's based in Mauritius, and it's sitting with $100 million to begin, but we want to scale it up to about $1 billion. And it's gone quite well, and it does a whole range of different types of trade finance assets. It does the agribusiness space, it does a little bit of oil and gas, it does FIs, and then it of course does a few other slices of other assets just to give it more diversification. And that's where we're also looking to do a special purpose equity fund around green energy and green growth type projects, with a very specific sponsor that has asked us to join forces. And again, it'll be another fund format. It'll be the bank joining forces with another entity to create a special purpose vehicle, but also a dedicated fund manager that will handle the origination process and of course the overall administration of the fund. And so we're doing many different things to crowd in capital, and I think our shareholders, the African governments, the ministries of finance, and the central banks that created us many years, 35 years ago, when they first created us, they didn't think that a day would come where the capital structure itself would be opened up. So we've become a PPP ourselves, and we've provided a vehicle to give, risk-averse investors an opportunity to come into the region and sort of put their toe in the water with it's a more trusted or less risky counterpart that could be a first port of experience for them. And it's actually gone quite well. And so we're still rolling out as we speak. What's going to be very exciting is what we're calling Class C shares. And that will have limited restrictions to it. It'll allow institutional investors from all over the world to come in and take a slice of our equity. And the intention is to list it on the Mauritius Stock Exchange. And so that'll be a whole new frontier for us. But this is just to give you a sense of how committed and enthusiastic we've been as a DFI to attract institutional capital into growth opportunities in our neighborhood. And we started with African institutional investors, actually. Our first non-African institutional investor came in last year from Europe. It's a Danish institutional investor that came in with a $20 million ticket, and now they're looking to come to scale up with a second $20 million ticket. And so it's been a very interesting run, and I look forward to the day where I can start counting some North American institutional investors in my stakeholder community. So maybe one day we'll have that conversation, Aubrey.
Love to. I think that they need partners just like you guys, really. And you're able to take the bigger check sizes, so that and put the money to work in meaningful ways. So I think they exactly need that.
Yep. Brilliant. And well, again, I think we just brokered a deal. I'm not sure what my facilitation fee will be, but we can talk about that offline. But excellent. And I think, Admasu, one of the key things that you mentioned was, would your original forefathers and founders have anticipated that this is the type of innovation that you'd be able to employ by opening up the capital structure today? Now, there are many of us many decades ago that were calling for, a lot of the trade barriers to be reduced across the continent. And a number of us had grown probably fatigued, didn't probably think we'd see it in our lifetime, but now we have been able to see that it is possible and it's manifested itself in the form of the African Continental Free Trade Area, which, as you know, has been subscribed to by all of our key heads of state from across the continent, creating probably the world's largest free trade area by number of countries, $3.2 trillion GDP, operating environment from a trade space. But of course, it's coming at a time when there's increasing global retreat into protectionist tendencies and activities. I'd be interested to get all of your views on the promise and the prospects of increasing not only Africa's economic intra-African trade and industrial development potential through the African Continental Free Trade Area, but also to get your insights on the extent to which, as everyone's retreating and we're living in a more multipolar world, the extent to which Africa could leverage the African Continental Free Trade Area to increase its geopolitical and economic influence on the global stage. I'll go to you first of all on that one, Aubrey.
Yeah, I mean, listen, one of the biggest challenges of attracting investment into African markets has been the fragmentation of the region. Most of the countries and the economies are very small. And, we also have high logistics costs for that reason, and 54 different regulatory environments you have to operate in. And so when you think about the globe, only 3% of people live in small landlocked countries, but almost 31% of Africans live in small landlocked countries. So that adds cost of doing business automatically. So the African Continental Free Trade Agreement is obviously welcome from a business and investment perspective. And, I think that though there will be a delay on implementation due to the COVID crisis, everyone is eager to start seeing the barriers fall to the free movement of goods, people, and capital. And much of that progress was already made over the past few decades with the regional economic communities. EAC, for example, the East African community has been one of the leaders in that effort. So really it is an area where African countries have stood up to be the stalwart supporters of free trade in a time in which the US-China trade tensions, and there's been kind of a retrenchment away from free trade. I do think it becomes even more critical in this period whereby African countries need to unlock growth any way they can, because we're in the first contraction in 25 years. So unlocking growth comes from injecting efficiencies where there were none, and innovating, as Admasu said. You can't waste the opportunity. And obviously they're using blockchain to innovate, and you could in digitizing the same that can be done for pushing forward African trade. So I had a very good conversation with the Secretary General, Wamkele Mene, and one of the things he's very passionate is on the digital trade front. So how can we use this opportunity to push forward digitization solutions, to whether they be customs authorities, border clearances, anything that can really facilitate the trade. So I think we have to talk about the actual what's on the paper, the treaty, if you will, but then what's on the ground really, really matters in terms of reducing the cost of doing business. So it's a very welcome development. I think it does allow African countries to eventually negotiate as a strong bloc, and it is going to bring in more investment to the region as it's implemented. But we know that implementation of these type of agreements is a generational project. The faster we can grow using new technologies, the better. And I think there's a commitment there to see that. So Africa, while it can't trade right now as much with the external markets, can trade a lot with itself. And that's where Chinelo was mentioning earlier about local manufacturing, dealing with food, for example, reducing the food import bill, things of that sort are immediate priorities.
Fantastic. Thank you, Aubrey. I'd like to just stay with you, Aubrey, and in the interest of time. You know, you're sitting in North America, you've been working in the continent for a long period of time. You work with various public sector leaders as well as private sector leaders. I'd like to get your help us see and understand your 1-minute elevator pitch to African presidents seeking your top 5 recommendations on Build Back Better, post-COVID-19 economic strategies, on DFI partnerships with African governments that in your view can stimulate SME, private equity, capital market, and infrastructure development.
Well, that's a very big order, Hubert, but I will reduce it to kind of one word, and that is digitize. You know, we know that African governments and many of the operations are still paper-based, very dependent on the human relationships, not necessarily the structure or institutional. And this is the opportunity to really put forth digital solutions that can reduce a lot of the inefficiencies and inject a lot of the transparency. And those digital solutions can be blockchain oriented, as Admasu mentioned. So for me, it's really one thing, which is digitize, digitize, digitize during this period, and don't waste this opportunity to do so. And to look locally for those skills and solutions. I mean, as I said, we have now a much more robust African, venture and digital and tech ecosystem. You have a bunch of players in the digital payment space. They have capacities on the ground that were not there 10 years ago. And so we really do have this local solution to these global problems.
So Chinelo, let me turn to you now with the same question on the African continental free trade area. We know that you had an excellent session at the last Africa Investment Forum where you brought together key stakeholders from the trade ecosystem and the digital economy. We as the Continental Business Network have just submitted a high-level policy recommendation paper to the African Continental Free Trade Area and heads of state on, industrial e-trade and e-commerce policies that could fast-track the African Continental Free Trade Area's implementation. So it'll be really great to hear your views on the opportunities both within the continent and outside of the continent that will be catalyzed through the African Continental Free Trade Area. Thank you.
Thanks very much, Hubert. And as you mentioned, this was very prominent in the African Investment Forum Market Days in 2019. And it's something we're very passionate about. And despite the challenges, trying to get 54 countries to agree and some moving ahead of others, I think it's something that we will not relent on. Because it is even with several countries, like you mentioned, trying to turn more insular, I don't think there is any other way but to pursue this with as much vigor and as interest as possible. It will be imprudent for investors to discountenance the multilateral liberalization dynamics of the AfCFTA in making their current investment decisions, because that's the way to go, that's the future. And particularly with us in the AIF, the AIF cross-border harmonization is very critical, that we also embrace the various nuances of the AfCFTA. The point I would like to put across is this expectation that everything would happen automatically very quickly. It's not going to be easy at all. But then again, it's not going to be impossible. So we have to focus, and all of us, both within the continent and outside of it, be committed to the work that is required to bring this to fruition by creating the right linkages, building much needed consensus, education, and because that will be what will catalyze the sustainable trade on the continent. And as you know, AFDB is already funding some part of the secretariat, and everyone needs to come together again in a concerted effort to push through this laudable initiative. And I'm glad to see that despite the COVID, I mean, there has had to be a postponement of the implementation, but that's what it is, a postponement. There's still a lot of work going on beneath to ensure that we take this to completion. It's not a 100-meter dash. This is more like a cross-country hike, and we must not relent. Thank you.
Thank you very much, Chinelo. Absolutely. We must not relent. And I always have a very strong conversation with colleagues whenever both, whether it's the established businesses, small and medium-sized businesses, young entrepreneurs, we mustn't have conversations that start with, do you think the governments are going to make this happen? This is a business, private sector-led dynamic. So we in the private sector absolutely need to be asking ourselves at every juncture, what is it that we can do to support the implementation of it? Because we are the traders and the transactors and the financiers that are going to determine the ultimate success of this. And I think there's no stronger trader, financier, innovator that we're seeing that's really driving this agenda as a great example than both yourselves as the African Development Bank, as well as the Trade Development Bank and the likes of others. So Meso, it would be really great to get your views on this. Thank you.
Yes, Hubert, I think we're all very excited about the prospects ahead for this new continental market. Of course, it's not new as such. I think the sub-regions have already had efforts in place to create sub-regional markets. In fact, we were born out of one, as you might know, the common market for Eastern and Southern Africa. I think for me what is really interesting is the way in which the convergence of industrialization, the growth momentum, the demographics, all of that coming together to create a very attractive value proposition for larger scale investments that would take advantage of the new scale opportunities that would be presented by this new continental free trade agreement. So, of course, it's going to take a little bit of time to get traction, but we see huge opportunities for logistics, for trade and power. That is something that doesn't always occur to people when they think of trade, the trade agreement, but it's a huge value stream right there, and there's so many challenges right now with blackouts and the like, and so surplus energy in one part of the continent can very easily flow to another. A lot of transmission lines being laid out, so I see quite a bit of opportunity for trade and power, among other things. So yeah, I think the cross-border engagements going forward will unlock more interest and more appetite. I think, as others have said, we already see that we have a number of clients today that are operating in more than 4 or 5 different African economies, specific corporates, in a way that we didn't have 5 years ago. So we now have a particular unit in the bank that deals with African multinationals. African multinationals examples would be PPC, which is a cement company based in South Africa. Dangote is another one. We have Econet Wireless. We have Alliance One. We have, of course, in the aviation sector, we have Ethiopian Airlines that runs a number of airlines across multiple countries. So we have quite a number of clients that just kind of evolved to becoming quite significant, parts of our business in a way that we didn't quite foresee in terms of scale and pace. And we're seeing also banks doing the same. We ourselves are a cross-border business. We started off as a bank serving only a particular market, and now we've expanded. Now we've got about 3-4 different countries that have signed into TDB in a way that went outside the original conception of what we would be, just operating in a particular part of the continent. So I think the momentum is coming. I think the sensitization is there, and I think there's a number of other areas that are also picking up very nicely. I made reference to power, but if you just look at other very interesting sectors like the natural gas sector, refined petroleum as well, even though these are not green and the most how can I say, sexiest commodities to talk about these days, given the green agenda. But of course, natural gas is a very fast-growing segment of the resources play in Africa, especially on the eastern seaboard. We've had huge discoveries in Mozambique and Tanzania, also quite a bit in other countries, including even Ethiopia. So we're seeing the development of new types of resources that will need pipelines, that will need oil refineries, that will also provide very attractive opportunities for investors to come in, because these are, of course, very bankable types of assets we're talking about. We actually are running with a particular mandate to finance or to lead the co-financing of an oil refinery in our region, which will have a whole range of different partners. We're going to be working closely with a bank in Nigeria to be one of 2 MLAs to raise capital for a very significant oil refinery in a country where oil was discovered not so long ago. So these are the kinds of interesting developments that we're seeing. The other thing, of course, is PPPs are emerging, and there's a couple of very exciting high priority power generation projects that involve cross-border resources. And we've seen a very interesting development recently where a number of countries have come together to basically structure a power generation project, a cross-border power generation project as a PPP. And so these happen to be countries where there isn't that much headroom, to put it nicely, to take on additional sovereign debt. So the project will be basically driven through private investors. And it's going to be very interesting if this one takes off, because it's quite big. It's a multi-billion-dollar power project, and interestingly involves a consortium that has major players from 2 of the largest economies of the world. And it's not the kind of club deal you would expect in this day and age, but here we are as TDB holding the hands of two giants and playing the role of a facilitator, bringing them into a PPP. So one of the players gets the opportunity to provide the turbines for this massive project, and then the other ones are going to be the ones building it. And so there's a nice opportunity for both parties. And we get to do the advisory work, we make a little bit of fee income, and help be a rainmaker. So this is a particular regional project as well that's been on the cards for a long time. Everybody's been trying to get it to move, but it hadn't moved for a number of reasons. And this is now another opportunity we're seeing coming through. Even the oil refinery I referred to earlier on had a very strong regional dimension. The feasibility is built on that refinery serving 4 or 5 different countries. So a lot of very interesting developments that are cropping up. It's sometimes not so intuitive when you talk conceptually about it, but if you're actually working on the deals, you start to see the formations coming in. Thanks.
Fantastic. Thank you, Admasu. And then you really brought us back to some of the elements that we talked about when we started this, which is you know, we have a lot of mega projects and mega needs on the continent, both from an investment as well as a sort of sizable asset investment opportunity perspective. So I actually don't think I think it's very, very timely that we are now talking about these mega and large transactions, because as you know, it's not about the size of the transaction, it's about, does the structure make that deal bankable? And, you know, the capital will flow to bankable deals that have been properly structured and properly de-risked. And I think that, you know, both yourselves, the African Development Bank, are playing a catalytic role in that. We've seen that in some of the new innovations that are really coming to market. So we actually believe that there is real opportunity to start talking in the multi-billion-dollar type transactions and really being able to put them together, whereas 10 years ago, they would be seen as sort of, you know, probably getting ahead of ourselves just a little bit in terms of those deals. But I think what you're doing and what you're pioneering is proving that these deals can happen and are happening. And now's the real time to unlock those and optimize those particular benefits. So we wish you all the best with that particular transaction. And now to basically bring us to a close, you know, we have talked about the COVID situation, we've talked about the mobilization and crowding in of institutional capital. Of course, the African Continental Free Trade Area is a platform and an initiative that we all have great faith and confidence in, and we're all going to work together as the private sector, the public sector, and DFIs to make it a success. But our heads of state are always thirsty for knowledge and information and collaboration with the private sector. So I'm going to, as a parting shot, ask each of you to give us your 1-minute elevator pitch to African presidents seeking your top 5 recommendations on the commonly phrased now Build Back Better, the Build Back Better post-COVID-19 strategies on DFI partnerships with African governments that are capable of stimulating SME, private equity, capital market, and infrastructure development. You know, what can we do better now to build back better, building back on the initial point of let's not waste this crisis. I'll go ladies first, and then we've had Aubrey, and then we'll go to you at Meso. Thank you.
I think the most important thing and the most important takeaway from this COVID and in a bid not to waste this pandemic is for us to think inwards. Manufacturing on the continent, provision of facilities on the continent, technology on the continent, and agriculture, those 4 sectors which are of huge fallout of the COVID pandemic. I think we should focus very, very critically on how to be self-reliant on the continent. That would be it. Thank you.
Thank you very much, Chinelo. At Meso, the same question to you.
Yeah, well, I think there's always a number of things that come to mind. I've always been a big fan of advocating for micro and meso level reforms on the institutional side that just helps make business a lot easier to do. I think these are what we would call low-lying fruit. It doesn't require spending too much money on that. And I think we should just double down as African countries to really just make that investment climate and environment of business so much more easier for investors, not just foreign investors, but even Africans themselves who need to do business. So that would be one. And then within that specific bucket, I would highlight also the need to sort of update legislation that would be amenable to e-commerce, that would allow electronic signatures to work, to allow cross-border digitization, business dealings, including electronic registration, electronic transfer of securities. There's a whole range of legal measures that are not yet considered to be legal, that are constraints. So I think there's the United Nations Commission on International Trade, and and law has a specific set of model e-commerce laws that can be easily adopted by countries to actually help just ease the way for people to do business, virtually and electronically and the like. So I think that's a very practical area. I think the other area would be, of course, to just keep looking at generating momentum within the African capital space, right? Because especially with COVID-19, I think we've had a shock, and we've seen how global capital can retreat very quickly and show very little appetite for our part of the world. And so I think African capital needs to really be present in the continent to do development finance, trade finance, on terms, of course, that would be aligned to the specific mandate of that kind of capital. But there's a lot of opportunities to harness African capital much better. And I think the COVID-19 wake-up call has had, I think, a little bit of a bitter reminder to all of us that we still have a lot to do in that particular regard. I think industrialization, manufacturing, domestic production, all of the things that Chinelo said, of course, are very important as well. That takes time. Of course, you have to find sponsors, you have to find operators, and that can be done as well. But I think sometimes the easiest part is just bringing some African capital at home and plugging it into African institutions that have proved themselves. And I think there's quite a bit of work that needs to be done there. Thanks.
Thank you, Meso. And this is, these are points that I know that a number of you are not only working on independently, but you're also corralling and mobilizing a lot of colleagues to crowd in to not only make these things nice proposals, but you're actually implementing and giving practical expression to them through your own institutions and your own efforts. So we commend you. So I think in closing, we are well agreed, very agreed in terms of the importance of DFIs and partnerships with institutional investors. I don't think that can be understated, overstated rather. I think there is unanimous agreement that the African Continental Free Trade Area is a historic opportunity to be seized for our continent's both regional as well as global transformation. And, I think I'd like to just close out by thanking each of you for your time as speakers. You've given us some great insights. I'd also like to thank the audience, and to formally close this out, I'm now going to hand over to our colleague from the CFA. Thank you very much, everybody.
Hello, my name is Dennis Johnson. I am one of the event organizers for CFA Society New York Global Policymaker Series. I want to thank CFA Society New York for hosting today's event. Today's event is consistent with the Society's mission to provide the premier forum for the exchange of information among investment professionals, corporate management, and other interested members of the public. In addition, I want to thank today's speakers on the COVID-19 Africa Policy Response session for their participation and insights. Finally, I want to thank the audience for your interest in today's call. Please join us again for the next segment of the Global Policymaker Series. Be safe and goodbye.
Doing business in Africa, you can't afford to be without Africa Investor.